Keep up to date everywhere. News Talk 820 WBAP.
In the WBAP newsroom.
At the end of the year is upon us. You're starting to create some New Year's resolutions, trying to figure out exactly what you're going to do. Maybe you've got a few dollars laying around and you're thinking to yourself, what can I make some smart money moves before December 31? Now, what should I be doing this week to make sure that I don't pay more than my fair share of taxes, say, next year? We're going to talk about it shortly. Leonard Raskin is going to join us. He's a financial expert to give us some insight into that, because you can never plan too far in advance when it comes to your financial future, and you can't plan too far in advance for your tax burden as well. So we'll get some ideas to what we might be able to do to help save ourselves some money. There is some good news on the financial front as far as America is concerned. You know, we had the carrier jobs staying, and now we're hearing that Tesla and Panasonic may actually expand their operations in the U.S. as well, moving them from Japan to the U.S. We'll get into that a little bit later on. Leonard joins us right now with some insight into what we can do, though, personally here at the end of the year. Are there some moves that we can make, Leonard, that will save us money in 2017 when it comes to our taxes?
No question. There's a number of them. I think the important things, there's some that can save you taxes and some that can help you avoid bad penalties on your taxes. So let's start with some savings ideas. The first I would say is, if your listeners have a high deductible health plan, which lots of people have after the Affordable Care Act, you want to make sure that if you have that HSA availability, that you're using it. Single taxpayers can put up to $3,350 in the account. Married filing joint taxpayers, $6,750 in the account. That money goes in pre-tax, accrues tax-free, and if it's used for health care expenses, the money comes out tax-free. Mostly these get funded through work, but you can also send direct deposits into your HSA. Get them in by the end of the year. That's free pre-tax money. You got to use it if you have it. So
go ahead and continue to make deposits. The way ours works, it kind of comes out every month in our check. A deposit
right, but
does.
If you didn't schedule that for the maximum,
gotcha,
or you haven't gotten it in there, you can certainly send a one-time deposit in these next couple of days right into your account. Most of them have online portals you can do it through. Just get that money in right off the top of the line of your income for tax savings purposes for 16.
Gotcha. What else can we do?
Well, another is charitable contributions. If you've got charitable contributions you're thinking about making, might as well make them in the next 2 days. Take them off your 16 taxes. Beats making them next week and writing them off your 17 taxes.
Heck yeah. Yeah, go ahead and get that done.
Get that done. I wouldn't suggest making a contribution simply for the sake of tax savings, but if you're going to make the contribution, you might as well do it now.
Yeah. Hey, what about making, if you have the money laying around, and a lot of us don't have it, but if you do, what about making an early mortgage payment? Is that a good thing to do toward the end of the year?
It's a good thing to do. You get a one-time shot. So if you made an extra mortgage payment this year, or you could also prepay your property taxes this year, those things would be deductible in 2016. Now, it's a great advantage if you think your 2017 income is going to be potentially lower, because then you get more value in that deduction this year if you're in a lower tax bracket next year. But recognize, if you do that, then next year you might only make 11 mortgage payments. You might not make your property tax payment because you made it in advance. So next year, look ahead and realize you're not going to have as much deduction in the future.
What about the mortgage? Go ahead.
I was going to say, regarding the mortgage payment, I think that's a good idea. Not necessarily a good idea. It doesn't make much difference. The property tax, I think, is a better idea.
Gotcha.
And the reason is the Trump potential tax plan might do away with that as a tax deduction next year. So you might as well get the value of it, not knowing whether or not next year it's going to be available.
So tell me this, when it comes to maxing out, you mentioned earlier your HSA, should you also make sure you're maxing out that 401k contribution? And if you haven't done that, go ahead and make that contribution as well.
You certainly could, although the 401k is a little more difficult to get money into if it's not coming directly out of your paycheck. Now, if you work for a small business and they can take a one-time contribution, or you're self-employed and you can make that year-end contribution, by all means, that's a great tax deferral. The difference between that and the HSA is that's purely a deferral to the future, and you don't know what your future tax rate's going to be, where the HSA, pure deduction and money comes out tax-free. That's a great win.
Any other no-brainer out there, Leonard?
Well, I think there's a no-brainer that could cost people taxes if they don't do it properly. So this is the other side of the equation. If you're over 70 and a half and you have that IRA, you've got to take the required minimum distributions out of that account. If you don't take your required minimum distribution by 12/31, you end up with a 50% tax penalty for not taking what you were supposed to take. Make sure that your advisor, if the account's at a bank, the banker, that you've gotten your required minimum distribution out of that account, or there's big, ugly fines the IRS is waiting to assess.
All right, good deal. Leonard Raskin, thanks for the insight as well into that. Some smart money moves that we can make there. And by the way, one other thing that experts say you should do at the end of the year is take some time for yourself. Set aside some time to improve your mental and physical well-being because it's a crazy kind of month. But it's also not only helps, but also help your finances. So maybe that me time includes going to see a movie or stuff like that. But it can also be some me time to say, hey, I want to work on my finances. I want to kind of straighten things out here, get a plan together for 2017. Make some time for that as you head into the new year. Off to traffic, ClassicChevrolet.com right now. Traffic, watching Nikki Whalen.
Good news in Tarrant County. They've just about cleared that accident.